The housing market in America is shifting in ways most people never see coming. And behind the scenes, two powerful names are making massive moves: Warren Buffett and Blackstone. While everyday families are struggling to keep up with skyrocketing home prices and rising rents, these financial giants are quietly buying up properties across the country, reshaping what it means to own the American dream. In today's video, we'll break down what Buffett and Blackstone are really doing, why it matters to you, and how this could change the housing market for years to come. Before we dive in, make sure to hit that subscribe button and turn on the notification bell so you never miss our deep dives into the housing market, real estate trends, and the financial shifts shaping our future. Let's get started. When it comes to real estate, not all players are equal. Some individuals and companies are so influential that a single move they make can shift entire markets. At the top of this list are names like Warren Buffett and Blackstone. Together, they represent two very different yet equally powerful forces shaping housing, investing, and the future of property ownership in America. Warren Buffett, through his company Berkshire Hathaway, is a master of long-term strategy. He's not chasing fast flips or speculative gains. He's looking at businesses and assets that will thrive for decades. In real estate, his influence shows through Berkshire's ownership of companies tied to home building, construction, and real estate brokerage. His moves often signal confidence or concern about the direction of the market. When Buffett speaks or invests, people pay attention because it's usually not about today's trend but about the long game. On the other side, Blackstone represents the sheer scale and aggressive investment that has transformed the housing market. As one of the largest private equity firms in the world, Blackstone has poured billions into residential real estate, often buying up single-family homes by the thousands. This has fueled controversy. Some say they're providing stability and rental options, while others argue they're driving up prices and squeezing out everyday buyers. Unlike Buffett's steady approach, Blackstone moves with size and speed, reshaping markets almost overnight. What makes these two power players so interesting is how their strategies reflect broader forces in real estate. Buffett represents patience, fundamentals, and long-term confidence. Blackstone embodies scale, speed, and financialization. Together, they show us the two extremes of influence, one in rules, the other in rapid transformation. For everyday people, understanding what these giants do is more than curiosity. Their decisions can trickle down to affect mortgage rates, housing supply, rent prices, and even how competitive it is to buy a home. While you might not see Warren Buffett at your local open house or Blackstone at your neighborhood realtor's office, their presence is felt in ways that shape opportunities or challenges for millions of families. In the end, the power players in real estate aren't just buying properties. They're reshaping the rules of the game. And to keep up, you need to know how they move. When you put Warren Buffett and Blackstone side by side, what stands out most is not just their scale, but the difference in strategy. These two giants approach real estate from entirely different mindsets, almost like two players sitting at the same table, but using different rule books. Warren Buffett, often called the Oracle of Omaha, is famous for patience. His philosophy is simple: find value, invest in quality, and wait. In real estate, that translates into owning companies that benefit from housing over decades, like Clayton Homes, which build affordable manufactured housing, or Home Services of America, one of the nation's largest real estate brokerages. He doesn't try to time the market. Instead, he positions himself to profit no matter the cycle. When the market is hot, his companies benefit. When the market cools, he sees opportunity to expand. Buffett is playing chess, always thinking 5 moves ahead. Blackstone, on the other hand, plays an entirely different game. Instead of waiting decades, they move aggressively in the moment. After the 2008 housing crash, Blackstone bought tens of thousands of foreclosed homes, turning them into rentals under their subsidiary Invitation Homes. They weren't just buying houses. They were changing the entire landscape of the rental market. By moving quickly and at scale, Blackstone became one of the largest landlords in the United States practically overnight. The key difference? Buffett bets on the businesses around real estate, while Blackstone buys the real estate itself. Buffett trusts that America will always need homes, and he invests in the industries that make that possible. Blackstone, meanwhile, sees homes as financial assets, bundles of cash flow and appreciation potential. This split in philosophy matters for ordinary people. Buffett's approach might support stability in the long run, but Blackstone's strategy can influence prices today. When Blackstone enters a market and buys thousands of homes, local buyers often find themselves priced out. It's like competing with a heavyweight who can outbid you every time. Together, these two approaches highlight the tension in modern housing. Is a home meant to be a place to live, or an investment vehicle for the wealthy? The answer depends on which giant you're watching. When Warren Buffett and Blackstone make moves in the housing market, it doesn't just stay on Wall Street. The ripple effect hits regular Americans. Families trying to buy their first home, renters struggling with rising monthly costs, and communities where affordability feels like a distant dream. Let's start with Buffett's side. His companies, like Clayton Homes, focus on manufactured housing. At first glance, that looks like a win for affordability. Lower-cost housing options for people priced out of traditional single-family homes. But there's another side to the story. Manufactured homes often come with land lease arrangements, high-interest loans, and limited resale value. While Buffett provides supply, critics argue it's not always the kind of supply that helps families build long-term wealth. In other words, he's meeting demand, but not necessarily solving the affordability crisis. Now look at Blackstone. Their model is much more direct. Buy up thousands of homes and rent them out. For everyday people, this creates a new kind of competition. Imagine you're trying to buy a starter home in your local neighborhood. Suddenly, you're not just competing against other families. You're competing against an investment giant with billions in cash. Blackstone can outbid, buy in bulk, and hold properties indefinitely. The result? Higher prices and fewer homes available for average buyers. And once they own these homes, the impact continues. Renters often face higher rents, strict lease terms, and less flexibility. For Blackstone, it's about maximizing cash flow for investors. For renters, it's about losing control over one of the most basic human needs, shelter. The psychological effect is just as powerful. For decades, owning a home was part of the American dream. It symbolized stability, freedom, and upward mobility. But as corporations like Blackstone become mega landlords and Buffett's, companies reshape the entry-level housing market. Many families feel like that dream is slipping away. Instead of working toward ownership, they're stuck renting forever. This is why so many Americans are paying close attention to the moves of Buffett and Blackstone. These aren't just rich investors playing games with numbers. These are decisions that shape communities, decide who gets to own a home, and determine whether the next generation has the same opportunities as the last.